Hey guys, it's Machika. There's an unprecedented hate campaign going on against Binance. So the question is Binance actually in danger? Let's talk about that, because even the charts are starting to give us early signals. A very important indicator just flashed, and on-chain data shows that Bitcoin is now in record-level distribution. How could this impact altcoins? Has the current correction already ended? And where are the next key levels for Bitcoin and Ethereum? Welcome to the Daily Crypto Market Review, October 15th. If we look closely at Bitcoin and Ethereum charts, nothing major has changed since yesterday. When you remove all the noise and manipulation that happened after CME Bitcoin futures closed this weekend, you'll notice something simple. Yesterday, Bitcoin dipped just enough to fill the CME gap. Everyone saw that gap. Traders were waiting for it to be filled, and as expected, price bounced right after filling it. But now that bounce is starting to fade. Right now, the short-term setup looks bearish again. The next target for correction might be the liquidity pool around 108K, 106K. If Bitcoin dips below 110K, that's where enough energy will likely build up for a potential reversal later. But until that happens, opening new long positions is still risky. The liquidation heat map, which we share in our Telegram group, confirms that there's a major long liquidation zone right below 110K. Once that gets cleared, we could see a healthy rebound toward 117K, 118K, where a big cluster of short liquidity sits. So if you're looking for the best spot entry point, it's only worth considering after such a liquidity sweep. As for Ethereum, it's a bit tricky today. The ETH CHAD USD chart looks neutral, but the ETH BTC pair still looks bullish, meaning ETH might fall less if Bitcoin drops and might rise faster if Bitcoin bounces. Technically, ETH BTC could retest its daily support around 0.0345, which, if Bitcoin trades near 107K, would equal roughly $3,690 per ETH. Could we see that deeper correction soon? Maybe. The heat map shows big liquidation clusters near 3,162, so a quick move there wouldn't surprise me. But for now, the main focus stays on Bitcoin's price action. Alright guys, let's talk about a very reliable indicator. And I'm being a little sarcastic here. You probably know Jim Cramer, the American TV host who's famous for his reverse predictions. Yeah, the same guy who told everyone to sell Bitcoin at $15,500 before it went up 400%, and called people buying Solana at $80 complete idiots. Crypto veterans know one thing. Every time Jim Cramer turns bearish, the market usually flips bullish soon after. And guess what? On September 29th, he tweeted just one word: crypto. As always, his signal worked only for a few hours. Bitcoin pumped a little, then dumped again on October 10th. But now he's back. Yesterday on his TV show, Jim said he hopes that crypto investors will move their money into US stocks and the real economy. And you know what that means? When he wants people out of crypto, it's usually the best time to start watching for entry. This aligns perfectly with what we're seeing right now. The global risk appetite seems to be rising again. The Russell 2000 index, that's US small-cap stocks, is recovering after the recent correction and trying to break above its previous all-time high. And here's why that matters. Every time this index managed to break its high, without exception, crypto entered a parabolic phase right after. No magic, no conspiracy, just market mechanics. When small caps pump, big money knows that the crowd is ready to take risks again. And what's the ultimate high-risk market? Exactly us crypto. The US stock market is overheated, valuations are stretched, and investors chasing higher returns will soon start looking at low-cap stocks. And yes, crypto as well. So even though Bitcoin is in a massive distribution phase, that risk-on sentiment could still trigger a strong altcoin rally soon. Especially once the US shutdown ends and the SEC speeds up ETF approvals. Now let's talk about what everyone's buzzing about: the insane hate campaign against Binance. Social media is full of accusations, rumors, and memes. And of course, all fingers point at CZ, Changpeng Zhao, the former CEO of Binance. People are blaming him for everything: the collapse of FTX, the crash of FTT, even the recent market dump. Some claim he's been dumping Solana and trying to steal liquidity for his new Binance Smart Chain meme platform. They're also saying he's attacking the decentralized exchange Hyperliquid to push up Binance's own DEX, Aster. And as usual, crypto Twitter is in full drama mode. Others go even further in saying Binance lags or freezes exactly when the market crashes to hide the real number of liquidations. Some users even showed screenshots proving the exchange processed just one liquidation per second during the crash, which obviously can't be true given the volume. And to make the feud even stronger, Binance reportedly gave a trader who lost $2.6 million consolation prize of 20 cents cashback. That story went viral instantly. Even Coinbase employees jumped into the comments, calling Binance's listing department the most corrupt in the market. And honestly, looking at some of their latest listings, you can see why people say that. All this drama happens right when the rumors about Trump possibly granting CZ amnesty are heating up. Before that, CZ wasn't this bold. Now he's suddenly everywhere, posting, defending, fighting back. Look, I'm not here to spread feud or panic. Binance has survived crises before, and most likely it will be fine again. But the BNB chart is showing something we can't ignore: a possible double top pattern after a strong climax move. Usually that means one thing: volatility ahead. So be extra careful with BNB positions and anything connected to the Binance Smart Chain ecosystem right now. Even if the exchange itself is safe, the market sentiment around it can swing hard in either direction. Now, let's zoom out for a second. According to on-chain data, Bitcoin is in record distribution mode. Around 41% of realized market cap is now held by short-term retail investors. To put that in perspective, in April 2025, it was only 12%, and even at the peak of the 2021 bull run, it reached 31%. Today, it's 44%, the highest ever. That means one thing: this bull cycle is probably entering its final phase. But here's the twist: the final phase of every bull cycle is when altcoins explode. Every time Bitcoin becomes over-distributed and retail starts losing faith, that's when liquidity flows into alts. So yeah, after all the pain, after this brutal shakeout, it might finally be alt season time. Almost all liquidity below has already been cleared from centralized exchanges. The only thing missing: a pause in gold's rally. Right now, gold is at $4,200, completely parabolic. That's scary, but historically, when gold tops out and starts moving sideways or correcting, that's when crypto rallies the hardest. It happened in April, it happened in late 2024, and it could happen again right now. So yeah, and volatility is high, but conditions are aligning. The US shut down delayed inflation data until October 24th, so for now, volatility is low. But Fed Chairman Jerome Powell just said that risks of rising unemployment are now higher than inflation. Translation: rates could go down sooner than people expect. And that's pure fuel for both stocks and crypto. So my message today is simple: don't panic. Stay patient. Let Bitcoin finish its shakeout and get ready, because the next altcoin wave might already be forming. If you want the full breakdown, projects, entry zones, and my personal setups, check out the full video on my YouTube channel. Everything is explained there in detail. I'm Machika. Stay smart, stay calm, and I'll see you in the next update. Peace.